So, is investing in the stock market basically just a high-stakes trip to the casino? It's a question that comes up all the time, and you know what? It's a fair one. Today, we're going to cut through the noise and get real about that super thin, often blurry line between disciplined trading and just, well, rolling the dice. Let's dive in.
I mean, you can see why people think this, right? The language we use is almost identical. We talk about placing a bet on a hot stock, we talk about risk, we dream about that one huge win. So yeah, it's really easy to look at Wall Street and see one gigantic, blinking, chaotic casino. But is that what's really going on?
All right, so here's our game plan. First, we'll talk about that Wall Street casino idea and why it's so easy to get them mixed up. Then we're going to get to the heart of it, skill versus pure luck. After that, we'll look at solid analysis versus a blind bet, how the pros actually control their risk, and wrap it all up with what might be the most important piece of the puzzle, your mindset.
Okay, first things first. Let's just lean into the confusion for a minute, because to really understand the difference, you have to appreciate why these two things can look and feel so incredibly similar from the outside. I mean, on the surface, they're practically twins. In both cases, you're putting your own money on the line, you're taking on risk, and you're doing it all with the hope of a big payoff. The adrenaline rush you get from a winning trade can feel exactly the same as hitting your number on the roulette wheel. This is the whole Wall Street casino myth in a nutshell, but this is also where the similarities pretty much stop. So where does it all fall apart? Well, it all boils down to this one huge distinction. Are we talking about skill, or are we talking about pure dumb luck? The real difference isn't about hoping for a good outcome, it's about whether you can actually influence that outcome.
Now here's a word that often gets a bad rap, speculation. But in the trading world, it's not a dirty word at all. It means taking on a calculated risk. And that word, calculated, is everything. It means you've done your homework, you have a theory, you have a reason for taking that risk. You're not just hoping, you're expecting a certain result based on the evidence you've gathered.
This really lays it all out, doesn't it? On one side, you have the trader. They're using skill, they're using analysis to find some kind of statistical advantage, an edge, and they are always actively managing their risk. Then you have the gambler. They're relying on nothing but chance, and they're knowingly playing a game where the house has a built-in mathematical edge that guarantees they lose over time.
So that brings us to the actual how. How do these two different people operate day to day? What are their rules of engagement? And honestly, the difference here is just staggering.
A real trader follows a process, a system. It's repeatable. They do their research, they gather data, they form a specific thesis, like, I believe this stock will go up because of X, Y, and Z. Then and only then do they make the trade. But hey, they're not done. They're actively managing that position, and maybe most critically, they go back and review their performance, win or lose, so they can learn and get better. It's a full-on discipline.
And the gambler's process. Well, you place a bet. That's it. One step. There's no research, no thesis, no management, no review. Just an action and a hope. It's the difference between building a business and buying a lottery ticket.
Okay, let's talk about risk, because while both activities have it, the way it's handled is just worlds apart. For a trader, managing risk isn't just some nice idea. It's the absolute foundation of their career, and it all comes down to math.
The big concept here is something called expected value, or EV for short. Now, it might sound a little technical, but the idea is actually super powerful and pretty simple. It's the math that tells you whether a decision is likely to be profitable over the long haul. Professional traders, professional poker players, they live and die by this. They only make moves that have a positive expected value.
Let's make this crystal clear. Say a trader develops a strategy that wins 60% of the time. Even if the wins and losses are the same size, that little 10% edge means that over hundreds of trades, their expected value is positive. They are mathematically expected to make money. Now look at a roulette wheel. The odds of winning on a single number bet are always less than 50%. The EV is negative. You can have a lucky night, for sure. But over time, the casino is mathematically guaranteed to win.
Here's just another way to visualize it. A trader's entire job is to find an edge, however small, and exploit it over and over. Their edge is positive. A gambler, on the other hand, is literally paying for the privilege of playing a game where the edge is stacked against them. Their edge is negative. One is a solvable problem, the other is a mathematical certainty of long-term loss.
And finally, we get to what might be the biggest differentiator of all, psychology. The game you play inside your own head is often what separates the pros from the people who are just throwing their money away.
A trader's mind is all about the process. They trust that if they stick to their system, the results will take care of themselves. A loss isn't a personal failure. It's just a business expense. It's the cost of being in the market. The gambler, they're totally outcome-oriented. Every loss feels like a personal blow, and often they're not even seeking profit anymore. They're just chasing that thrill, that dopamine hit of a big, flashy win.
So let's do a quick gut check and be honest with yourself here. Are you following a thought-out plan, or are you just jumping on a hot tip you heard somewhere? Do you know exactly where you're going to get out of a trade before you even get in? Are you chasing your losses, trying to get it all back in one big move? Your answers to these questions, they're going to tell you a whole lot about which side of the line you're really on.
I love this quote from the legendary trader Victor Scarandale. It just nails it. Success in this game isn't about having the highest IQ. If it were, way more smart people would be rich from trading. It's about having the emotional discipline to stick to your plan, day in and day out, and to treat it like a serious business, not a get-rich-quick scheme.
So if we boil this entire thing down to one crucial point, it's this. Traders don't just play the market. They execute a plan within the market. They have an edge, they have a process, they have a risk management strategy. Gamblers, they're just playing the odds, and their only strategy is hope.
And that really just leaves one final question for you to think about. When you put your hard-earned money to work in the markets, are you operating with a plan or are you operating with a hope? Which side of that very thin line are you really standing on?